If you're working a 9 to 5, you're sitting on one of the most powerful investing advantages that millionaires understand, but almost nobody uses. Every paycheck could be buying ownership in what is becoming the next generation of global financial infrastructure. Today, I'll show you exactly what I do every payday and why I believe this payday investing strategy has the potential to make millionaires by the year 2030. I'm Nick, and I help working professionals get off their financial treadmill, create lasting wealth, and build a life they never want to retire from. If this resonates with you, like and subscribe below. So let's imagine it's 1998 again. The internet exists, Amazon's here, Google doesn't even exist yet. Most people still think the internet is just a place to send emails. Now imagine someone tells you the companies building the internet are going to change almost every industry on the face of the earth. Most people would have laughed at you, right? Fast forward 25 years, the internet transformed everything from banking, shopping, communication, entertainment, education, even the way we date and find a spouse. Here's the thing. We are now living in a once in a thousand year financial technological transition. And blockchain technology is going through the exact same stages the internet did when it was being adopted worldwide. I'm not talking about hyped up meme coins or pumping up crypto scams. I'm talking about utility-based cryptocurrencies, blockchain networks that are actually solving trillion-dollar problems inside global finance. Today, I'll show you exactly why I use the investing strategy of dollar cost averaging. And I'll show you why I personally dollar cost average into 3 specific cryptocurrency projects every single pay period. Now, this is not financial advice, strictly my own opinion, and should be used for educational purposes only. This is simply a strategy I've chosen because we're still in the early stages of a global financial and technological revolution. Between now and 2030, we have an unprecedented generational opportunity to own the actual technological rails of the new financial system, with upside wealth potential that no other previous generation has had an opportunity to participate in. So let's get into exactly what dollar cost averaging is and why it's so powerful. See, wealth building comes from consistency. So think about your paycheck. Some people spend it, some people just save and hoard it, very few actually invest it. Imagine investing just a percentage every single paycheck automatically. That's called dollar cost averaging, or DCA. Instead of worrying whether prices are up or down on your assets, you simply buy consistently. It takes emotion out of the whole investing process. And over years, you accumulate more ownership. The strategy removes emotion from investing and has historically been one of the ways investors reduce risk of making a single poorly timed purchase. Although it doesn't completely eliminate investment risk, right? But here's the truth. No one consistently buys the bottom, nobody. But disciplined investors don't need to. It's not about timing and constantly staying glued to a screen or your phone. It's about consistently investing in the technologies that are shaping the future of our world. So what this looks like is every single pay period, I take a certain percentage of my income and invest it into these specific cryptocurrency assets. And which assets matters greatly because the crypto market has thousands of coins, but the reality is 95% won't exist 5 years from now. History tells us that every technological revolution creates far more losers than winners. So how do you separate signal from noise? You ask one question: what problem does this technology solve? Real technology solves expensive problems. The larger the problem, the larger the opportunity. That brings us to 3 projects that have spent years building infrastructure ahead of the hype. These are the 3 I personally have been dollar cost averaging into over the past few years. So the first one is XRP. This stands for Cross-Border Remittance Protocol. The XRP ledger was created in 2012, and the company that created XRP, Ripple, focuses on working with financial institutions rather than trying to replace them. What problem does Ripple actually try to solve? Cross-border payments. Today, moving money internationally can involve multiple intermediaries, delays, and significant cost to institutions. Ripple utilizes the XRP ledger and the XRP token to make cross-border transfers settle in seconds rather than days. And they use the XRP token as the bridge asset to facilitate payment flows. The XRP ledger is designed for fast settlement, low transaction costs, and uses a consensus protocol rather than proof of work mining. Now that's a massive market. Trillions of dollars move internationally every year. And if blockchain makes that system faster and cheaper, that's real utility. Think about it. The average transaction time for processing on the XRP ledger is 3 seconds and costs fractions of a penny. So regardless of the transaction is for $20 or $500 million. Imagine being able to trade or transact tokenized gold, stocks, real estate, water rights, land, cattle, essentially anything on earth that can be tokenized. This is exactly what the XRP ledger does, and why one of the creators of this technology, David Schwartz, said that the price of an individual XRP token must be at a very high value for the system to operate smoothly and to provide that high liquidity for the volume of global transactions that this ledger will be facilitating. This is why I believe XRP is the greatest asymmetric investment opportunity of our lifetimes. So, what's the second one? Stellar, the Stellar network, and its native cryptocurrency, very similar to XRP, X. So Stellar actually shares part of its history with Ripple. Jed McCaleb co-founded Ripple before later co-founding the Stellar Development Foundation along with Joyce Kim. While Ripple and XRP primarily targets institutional payment solutions, Stellar and XLM focuses heavily on expanding affordable financial access and enabling low-cost cross-border transfers, particularly for individuals and businesses in underserved markets. The native asset XLM aims to connect financial institutions and payment systems so money can move quickly across borders with minimal fees. So think peer-to-peer level transactions, small businesses paying overseas suppliers, people without access to traditional banking. These are real-world problems. Thinking about continents like certain parts of Asia and Africa, some people have never even had a bank account. So some might ask, wouldn't this create competition with XRP? And the answer is not necessarily, because they are solving similar problems but at different levels. So XRP is for institutions, XLM is for everyday people and businesses. They've often been compared to gold and silver in the way each of them functions and the purpose they serve. So, like XRP, XLM is still an extremely affordable price today to build an allocation in 2026, but will also need a higher stable price to operate at its full potential. The good news is you're still early and can invest in these assets starting today. If this is something you're interested in, I have my free training below that I use with actual paid clients in my coaching program. It's called the Millennial Money Freedom Training. It goes over the 4 lies we believe about money, 4 truths about money that you can rewire your brain with to crush your limiting beliefs about money, and the investing strategies I'm using today to build wealth in this generation. Now, the third cryptocurrency asset I like is Hedera, or HBAR as the token itself is called. In HBAR, unlike traditional blockchains, Hedera HBAR uses hashgraph technology. The project was co-founded by Dr. Lehman Baird, the inventor of the hashgraph consensus algorithm. Hedera is governed by a council made up of major global organizations, and it's an approach intended to provide enterprise-grade governance instead of just focusing on payments. Meaning, Hedera targets enterprise applications like tokenization. What is tokenization? It's simply taking a physical item in the real world and breaking it up into smaller pieces to be able to be traded on a digital blockchain. Hedera is also working with supply chains, identity solutions, artificial intelligence, real-world assets, carbon tracking, digital credentials, all the requirements of the global agenda that's unfolding and being implemented right now through 2030. And its design emphasizes high throughput, predictable fees, and energy efficiency for these enterprise use cases. Hedera Hashgraph Network has some of the fastest network transaction times out of any utility cryptocurrency, and is still pennies on the dollar to invest in now in 2026. So, why I believe we're still early. One question I hear all the time is, well, am I too late to invest in these technologies? Personally, I don't think so. Not because I know what prices will do by 2030, but because we're still early in the global adoption of blockchain infrastructure. And it's still developing in many nations, and many financial institutions are still in the early stages of implementing this tokenization, utilizing digital assets, and modernizing their payment rails. So, which specific networks ultimately become dominant remains uncertain. But when people think about investing, they usually focus on price when they should be focusing on adoption. Technology adoption generally happens in stages. First, the developers, then the businesses, then the institutions drag on board, and then finally the public. But by the time everyone agrees something is revolutionary, the biggest gains have already occurred. The amazing thing with this opportunity compared to previous technological revolutions is that the everyday person has the ability to invest in these technologies without having millions of dollars or even being an accredited investor. This is why I continue to invest consistently with dollar cost averaging every single paycheck instead of just trying to predict short-term price movements. So here's the takeaway. When I was working my 9 to 5, I stopped viewing my paycheck as income and started seeing it as capital. Every paycheck gives you another opportunity to purchase real assets solving real problems in our generation. And for me, that meant consistently investing through dollar cost averaging, like I still do, into these projects that I believe have meaningful long-term utility. Because now global governments are starting to create and implement legal architecture, the framework around how these technologies can be used and will be used. It's not a matter of if, but now it's a matter of when these technologies will become the rails of the new global financial infrastructure. The people who accumulated early and patiently, not emotionally, will be in a far stronger financial position than those who waited for certainty. See, history shows us something interesting. By the time the world realizes that technology has changed everything, the opportunity to buy it early is gone. So the question isn't, what will these coins be worth next month? The better question is, what will global finance look like a few years from now upon adoption of these technologies? And as always, do your own research. And if you do, I believe you'll come to the same conclusions and convictions about these digital assets that I have. And if you find value in today's video, hit the like button because it tells YouTube share this with more people trying to build long-term wealth. And if you want to jumpstart on that, check out my free Millennial Money Freedom training below in the description. I'll see you in the next one.